And time now for the big picture. I want to welcome in the team from Charles Schwab. We've got Joe Mazzola, head trading derivatives strategist, Charles Schwab, and Michelle Gibley, director of international research, also Charles Schwab. All right, Joe, I want to start with you. Let's start with, I want to get your take on kind of overall market take. We had the S&P 500 flirting with this record. Now we see some pushback as we work through the last few minutes of the trading day. Does this line up with the patterns that you've been paying attention to for Friday action this year?
Well, it lines up with the patterns that we've seen for the last couple of months, where it's basically a sideways market. It was only a couple of weeks ago we had all-time highs, and it'd be great to get some follow through and set an all-time high at the end of the day here. We're still a few points away from that. So from a psychological standpoint, if we can put in a new all-time high, you probably get some more participants jumping in next week. But, it's just interesting. There's not much volatility, and as crazy as it seems, because a lot of announcements have happened over the weekend, this being an extended weekend, of course, so you probably won't see much VIX buyers or any type of hedging buyers. But it's been the case that you get these announcements over the weekend, and on Monday, you see the futures flush a bit, but nobody seems to want to hedge. And it shows that there's some complacency in the market. We're losing some of, we're getting a little bit of divergence from, what we're seeing on RSI versus what we're seeing on the S&P 500. But all that being said, it's kind of steady as she goes. I hate to say it, it's a boring market.
I've consistently heard that today. I think you're talking about more than today, but I've consistently heard that theme throughout the day. And it does remind me of something that a veteran trader used to say down here. This was a waste of a clean shirt day. Now, I wouldn't characterize it as that because, there's action in different parts of the market. Michelle, I want to get your take on the reciprocal tariff announcement that we got from President Trump this week. It looks like, it's still taking some time. It's still taking shape. How should investors view that? Is that a reason to be cautious, or is it a buying opportunity?
Yeah, I think that this is just the latest in the tariff toolbox, a reciprocal tariff. This week's announcement was really more of a plan for a plan, so there's still a lot we don't know. Trump administration is going to be looking at a country-by-country analysis, looking at tariffs, value-added taxes, which are basically just sales taxes on all goods sold, both imported and domestically made. They're going to look at currency valuations, trade barriers. It's a lot to look at. The reports due April 1st, but this delay in implementation gives time for negotiation. And Trump indicated he would lower tariffs if other countries lowered theirs. So, this is really just reinforcing our view that we do believe tariffs are likely to rise, but maybe by less than threatened. And these tariffs they may have more bark than bite, but trying to trade every headline is a little bit fraught with risk. We're going to continue to see tariffs in the headlines, and, investors might want to take a longer term perspective.
Joe, I want to, given that longer-term perspective thought that Michelle just had, and your comment earlier about the VIX being around 15, below 15 right now, we've got low volatility here. But given the risks that are at our forefront, whether we're talking about tariffs, global uncertainty, the path forward for rates, is this reduced volatility a red flag? Is it too sleepy right now?
It could be. It could be. I'll tell you two things that I'm looking at from a sentiment standpoint. Investor sentiment is actually getting a little bit more bearish. Whether we're looking at our Schwab Trading Activity Index, which showed a bit of a pullback for January sentiment, but even our own trader sentiment. So not only did we look at the behavior, but we also asked for some attitudinal data, and they said they'd be getting more bearish as well too. A lot of it has to do with the trade and tariff policy, but extend that to what you see in the AAII bearish bull sentiment, and that's getting more bearish on the investor sentiment side. Now look at that relative to kind of what we're seeing with hedge funds, and hedge funds are staying long the market. So, I don't look at this as we are kind of in a market where there's some, irrational exuberance, to steal a phrase from Greenspan. I don't see that. What I see is a market that maybe is a little bit top heavy, but could have some more legs just because it's climbing a bit of a wall of worry here.
All right, Michelle, I want to go back to you on this question. There's been obviously this push for America First policy here in the U.S. At the same time, we've seen some outperformance in global markets and international markets beyond the U.S. markets. What is driving that from your perspective?
Yeah, I think it might be a surprise that international is outperforming in this environment. They actually could be a bit of a haven from the trade war. If you look at the sector exposure for MSCI EFA, the three biggest sectors are financials, industrials, and healthcare, and they comprise more than half the index, and they're outperforming this year. Financials in particular may be a haven because they're not directly exposed to tariffs. And, pessimism has really been pervasive about international, Europe in particular. As you mentioned, the international is outperforming. The MSCI EMU index is up triple that of the S&P 500, and the broader EFA index is almost double that of the S&P 500. And, it's important to remember that for stocks, better or worse matters more than good or bad. And recent economic data in Europe has been surprising to the upside.
Better or worse matters more than good or bad. That's a new adage I guess I have to add to my vocabulary. All right, I'm going to put a pin in our conversation. I appreciate you both joining us this Friday. Happy Valentine's Day to both of you. Joe Mazzola, head trading derivative strategist. Thank you. Charles Schwab and Michelle Gibley, director of international research, also with Schwab.